Nothing in this video is financial advice. Hello crypto guys and everybody who's new to the channel. It's been a while since the last video and I figured I just saw Benjamin Cowen's video on the secondary scare and it was super interesting to me. I've been following the guy for quite some time and started doing some of my own charting now. Obviously don't take this as an investment advice or anything, because I'm not a professional trader either, but I am looking to capitalize on these kinds of drops in the coming months down the road, depending on how long does it take. So I figured I'd make this one video here about my own thinking on what could be the possible pattern and path for the Bitcoin price and the crypto market price to develop. What we have here is just the Bitcoin, and obviously alts are gonna do their own dance, as the Benjamin Cowen discussed in his great video. But what I'd wanna discuss here briefly is when could be the possible bottom be, no matter where it ends up going. What you're seeing here, I'm not claiming that this is the ultimate bottoming zone or anything, but I am kind of playing around with the idea. It's good to have a few scenarios in your mind and understand the logic of from where would this come from. So let me take you through this thinking that I have here, and it's not awfully complicated. There are quite a few indicators on the chart, obviously, but just follow what I'll take you through and it should be quite easy to understand. So let's begin. First of all, what are these? As said, this is the kind of range that I'm assuming which could work as the kind of window to buy, where the possible bottoming of the price could end up happening. We'll get to the reasons in a minute. And where does that come from? Basically, how I originally defined this area, when we start to measure these certain trends from the tops that we've had in the market and the other resistance levels. This has already acted as a support, so it might be that we won't even go below it, but rather dance around in this area. And after this, when we get past this line here, we start to find a new uptrend. It's left to be seen. But yes, so basically these trend lines they seem to come together in this area in a powerful way, so it makes me think that there is some price action going to be happening in between October 20th and the end point is January 24th of next year. That's when I'd be looking to see a significant bottoming of the quicker bear trend that we're seeing happening here. Or, well, honestly, this might be over in a week or whatever. You just don't know. You just don't know. But I'm building this scenario and okay, what if this takes a little bit longer and it's a shakeout for the bulls and the bears take control for a little while. So yeah, that's where this window is coming from. Then you see we have these other interesting boxes here, and where are these coming from? Because you see here we have the moving averages, and what I've been doing here is green box here. It's an average of the earlier, when the 200-day moving average topped and started turning to the downtrend, how much did it take time in days for it to turn over and start coming up again. So basically, when was the end of the bear cycle? How long did the bear cycle take as long after the moving average turned down? So in this scenario, which is not guaranteed, but I'm still gonna try to account for it. Here our assumption is that the moving average is gonna start coming down by September 3rd this year, and when it does, if it does, I'm trying to figure out for how long would it actually go down and then turn up. And I've done this on all the occasions where I saw that there was a significant change in the moving average, and as you can see here, the count of days for the moving average turn was like 300 or like 29. We had to go through like 200 cycle, and here starting from 2018 till May 2019, it took 330 for the moving average to turn, and then we have one more here which was by far the lengthiest one, which took like 500 days for the moving average to turn. And here I am using the day count 341. As you can see, it's none of the same exact ones as what we have here, but I simply just took all of these and kind of like you can see I took the average count of days from all of these and came up with the 3-4. There's no like bulletproof way to define what would be the correct one, and I guess you could even argue that you could like take this one off and it would be 288, but even still I wanted to account for the worst possible scenario, so I kept that in there. And with that we could say that okay, like if by September 23rd the moving average actually starts to tilt down and go into the downtrend, I don't think it's gonna be this steep, but it could just like balance out like this. For example, what happened with this bull market, like the short-term thingy here, as you can see, like moving average didn't fall to these same levels at what we had with the prior lows, even though we came also to almost to match those lows, but here the moving average was like a little bit, it wasn't as steep of a slope when it started turning down. So what I'm thinking here is that if this starts turning down, then basically it would mean that it would take at max 341 days for it to actually start tilting back up. So the uptrend of the moving average would in like latest here based on this calculate. This itself can be like then segmented into two different areas, where the first one is 200 days long, because as you remember, shortest cycle that we had here in number of days is like 200, so I'm treating that as one of the segmentation. This subset means that in like once we start going down with the moving average, we wouldn't go or turn up before that 200 day mark if we start to go down. But the uptrend of the moving average would start earliest in March 24, and that's when we're obviously getting closer and closer to the Bitcoin halving next year. So yeah, that's the thinking basically behind this entire thing. And as you can see even from here, like when this is where the moving average started in the like prior case to turn around, the actual bottoming was a little bit earlier, and to an extent it's the same thing even with here. Like as you can see, the moving average started to run up around here, but the actual bottom was actually here. So the bottoming of the price happened before the moving average started to run up, and the same thing occurs here as well in the past. Like this is where the moving average started to turn up, and this is where we had the actual bottom. That's why it's interesting to see that this window of opportunity here between October 23rd and January 23, like 16th of January next year, this window of opportunity here kinda, in my opinion at least, like seems to work quite well with the assumption that okay, like what if the price would be bottoming here, and then from here on the actual moving average would also start going upward. That's my thinking here. I'd be curious to know, what did you guys think about all this? What are your own price targets? How you're planning to navigate through this market? I was actually myself even like considering just a couple days ago into like investing to the crypto volatility index, but
There were a few unanswered questions which I just didn't have the time to research them about the max losses you could possibly end up having through that if it all goes to shit. But at least at this point it does seem that I should have done the deal. But what you gonna do? Maybe next time around. It was just like astonishing how little volatility we had here in the past couple of weeks. But yeah, I didn't take the trade, so there's no going back in time. But this is the opportunity that I'm looking to capitalize if we get there. There are other scenarios obviously as well, and nothing is written in stone. We might very well just try kind of hug this trend line here and walk past this resistance level from here and see if the price starts to go up. But even then it might be very well that the moving average starts to tilt upward from here onwards. Let's see. But yeah, thanks for checking the video and see you in the next one.